Hey everybody, Jeremy here, coming at you for Sunday, October 1st, market bias update report. Diving right in here, looking at the S&P, we have had some major volatility come into the market. This was back Wednesday, where the Federal Reserve spoke and nobody liked what Jay Powell was saying. Basically, he'd said interest rates higher for longer, and we still might have another interest rate hike before the end of the year, which all of that was kind of known by the market. What wasn't known by the market was that the Federal Reserve was also going to update their dot plot projecting what interest rates might be through 2024, 25, and 2026. And those showed higher interest rates for longer duration than even the market anticipated with Jay Powell's rhetoric over the last several months of higher for longer. So that revision led to a bunch of selling. Now, technically, on the S&P 500 futures chart here on the daily, we aren't technically oversold yet on the RSI down here. You can see we're hovering around 34, and anything below 30 is technically our oversold indication, like we got back here on the doji on 818. So this tells me we might still have a little bit of selling pressure left. The MACD is trying to recover here slightly, and we did actually break down and set a new lower low on the MACD, which also confirms the new lower low that we set here on the actual price chart. So this is confirming potentially more bearish action to go on our volume here. We did see there was actually quite a bit more selling pressure than buying pressure. You can see that with the red versus the green on that volume ticker there. So right now, you have to assume that we are in downtrend temporarily. Whether or not this does eventually get bought up and we V-shape or whatever, that's a possibility, but not very likely. If the bulls do come back to play, I'm kind of anticipating them coming up to about the 43.83 level, somewhere right in here where this alert is, pulling back, potentially doing a little double bottom here, and then rock and rolling to the upside. So something kind of more like this, and then breaking out from there. Uh, Honestly, the more likely scenario in my estimation currently is that we are going to doji here and probably take out the low of whatever today's low is over the next few days, and then come right back down to retest the lows and this diagonal support line that we have right there. Depending on how long that takes, Thursday, Friday, we might find ourselves down here around the 42.50, 42.30 level. That's kind of the zone of support that I am looking at to the downside. And especially if we toss this out to a weekly chart, you can kind of see the gap in the range here we have. We've broken down below all of our short-term moving averages here, the 9 EMA and the 20 SMA. Any bounce like I was drawing on the daily chart would likely kind of fill that gap back up to the decreasing 9 and then potentially set up another rollover. And we don't have a lot of support on this weekly chart until we get into the zone right down here around 4,200. Which will correspond nicely with the rising 50-period moving average. So as of now, the nod has to go to the bears. To start the week, like I said, we might get a little bit of a pop here, and anything up to about 43.83, up to maybe 4,400. I'm not going to be terribly surprised at. I will be surprised if we get much past that on any kind of a rally. So right now we do have resistance overhead, pressure to the downside. Going out to the NASDAQ, similar picture, but not as bad. You can see on the S&P, if we go back to that really quick, actually, and throw this out to a weekly chart, you can see we kind of got a M for murder starting right here. This was kind of our base, and we tested up, came down, set the middle pivot, came back up and down again. So you have this kind of big M formation, double top formation up here. Usually that signals more bearish pressure to come if you break below that pivot in the middle, and the low there was 43.50. So we are just barely shy of 43.50 right now. We did close below that on last week's chart on Friday. And now we are kind of looking at that kiss of death potentially, where we might rally back up. Bears that shorted the market might start taking profit and drive the price back up a little bit, setting up that next rollover. And usually that next rollover is somewhere in the neighborhood of the depth of that M formation. So if we just activate that, just to give you a little charting perspective here, if we rally back into the 9, that would be showing just below our actual support level here. So I would kind of give that nod again to the 42 to 42.20, somewhere in there as our support level moving forward. I do anticipate that we probably are going to buy early in the week, have a little bit of short covering, and then roll over. Now, if we go back out with that same M for murder idea and go out to the NASDAQ, you can see the NASDAQ is sitting right at that support. We didn't actually break it. We had that support level right there. And so you guys can see this a little better. I'm going to mark this with a thicker pen. Let's do that. So then we had the big M, bam, come back up and back down. And now any driver to the upside that we have on the daily chart, let's do that. There we go. Anything that we have to the upside here, I am going to be looking at as kind of suspect. You can see I had an alert set below the pivot of this doji from Friday's candle. And then if we really wanted to trigger bearishly, we could look at this potentially as a doji forming and drop intraday and see what's going on the intraday chart and see if we can find a better level. And there really isn't a better level. If we wanted to short, we'd have to get below this cluster here. So shorting potentially below 18,811. And this pattern will break for the upside if we are able to get above these pivots and kind of the nonsense there. To the upside, that would invalidate the bearish pattern and put us more into neutrality. If we do get back up to that level, at that point, we'd be looking more at chop within this range, hoping to find a bottom and then break higher in mid-October. So really, we're going to have to wait and see based on the pivot low from this candle. If we do take that out and have a candle that closes below that this week, then it's lookout below and could potentially be a really big lookout below because we have a fairly sizable gap here before the next support level. We do have a little bit of support coming in here around 14,260, let's say, but the main support level isn't going to be until about 13,700. So on the downside, still some downside pressure to go. Wouldn't be surprised with a little bit of a bounce here today or tomorrow, followed by that kind of sell-off later in the week. Going out to the Russell. Russell isn't doing terrible. It's kind of in the middle of nonsensical range again, so we're going to have to see what goes on with that over the next few days. It is below all of its weekly moving averages here, so that is not a great look. Any bounce up into this range of about 1850 is going to be suspect, especially because we're still going to be below this diagonal resistance line as well. So any bounce that we get here, I'm kind of looking at as a reset to then come back down and test the lows around 1700. If we do break above that and have a couple of really bullish candles or something and get back up above, let's just call it 1900, I would then start to look for a secondary pattern to go higher, but that would need some time to clean itself up. That would be several weeks out. The most realistic spot that I see the chart going is kind of testing back down to these lows. So that's the Russell. And then finally going out to the Dow Jones. And this is interesting. Let's toss this out onto a weekly chart here because you can actually see if we start from the beginning of the year here and go till today, from where the market opened at the beginning of the year, I have to back that up just a tiny bit so you can see it. All right, so this gray line here is the start of the trading year. This is where the candle opened, so price opened. So we are actually only 1.1% higher. Sorry for the alerts going off here, guys. Where is it? Getting some movement in Bitcoin. I hope that beeping wasn't too obnoxious for you. So anyways, we are only about 1.1% above where we started the year after all of this nonsense. Now we're just kind of in the middle of that trading range for the year. Really needs to clean up, not a whole lot to see. If we go out to crude light, this chart is super interesting to me. And if you talk to different chartists, you will have wildly different expectations of what they are saying on this chart. Let me clear some of this up real quick so you can see what I am talking about a little bit better. There we go. So, depending on who you talk to, you are going to get some wildly different interpretations of this chart. One would be that we are coming right into a very massive diagonal resistance zone. We are overextended on the RSI. We've also gone from the low up to today's price. We are up 36% in the last about 3 months, which is a huge, huge move. So on those metrics, you would assume that this is going to pull back and settle itself down a little bit here. On the other side of the spectrum, I see this as consolidation after a massive, massive move. I'm actually impressed that we didn't pull back more. The last time we had this big move here, starting from like July and going into beginning of August, we actually had a significant price pullback. This one pulled back 8.6%, whereas from the peak here, we actually only pulled back to the low about 4.4% before trying to blast higher again. The market was not ready to sustain that. So now we are just kind of consolidating sideways. I'm not going to be really surprised with either a bearish or bullish movement at this point. We have run so hard that it's hard to justify in the next few days, at least, a lot of price appreciation. RSI is over extended. The MACD here has rolled over and confirmed lower with a new lower pivot. So that is of interest here. That kind of preceded the same right here. We had a slightly lower high, and then we had that bigger sell-off. So bigger sell-off might still be in the picture, but with the cuts that Saudi Arabia has made and extended through the end of the year, it's really hard to see us not having strong oil demand. So to me, I'm kind of interested in a bottoming play here. And if we zoom in on the daily chart, we can kind of get a little bit of a lay of the land as to what important support and resistance levels we are dealing with. So right now we have a pretty significant support level came in right here around 90.35. We have another important battle zone that came in right around 92.50. And then we have the diagonal resistance here in play. Let's just call that somewhere around 92. So that's kind of what we're looking at on the intraday chart. If we toss this back out to daily, gets a little sloppy, but to me, anything triggering above the previous candle here, the pivot high here at 92.43 is going to be potentially an up swing. So anything above 92.43, and I'm just going to toss my alert in there. Bam. On the intraday, that would be potential trigger in. It gets a little bit more difficult in terms of actual finding a stop loss on there. So we would again have to go intraday and kind of see what the risk reward looks like. Hopefully, as we break back up here to that 92.44 level, hopefully we get a little chop and a little consolidation and then break and it cleans this chart up. Otherwise, we'd have to have our stop way down here below this pivot low of 90.35. And that's a significant amount of risk, especially when you're dealing with the futures market. We could go out to XLE and check in on this chart to see if maybe there's a bottoming play coming off of the 50-period moving average here. If we get another, 1 or 2 days down and this 50-period moving average comes over, that could be a potential play to the upside. But we can ask for it. We can't always make the market do what we want to. We have to be nimble and play both sides, right? So wrapping up, let's pop out. Ooh, we're getting a nice move in Bitcoin right now. Look at that 30 minutes. Oh, yeah. Okay. Looking at the economic data coming out this week, ISM manufacturing data, PMI data is going to be very important on Monday. Fed Chair Powell speaks. I'm not really anticipating that, being much of a market mover. He's already said what he was going to say last week, and the market hated it. This week, he's just talking at like a roundtable conference, and even though there will be some question and answers on that, probably not going to be much of a market mover. Uh, ISM services PMI data here is going to be important. Non-farm payroll unemployment change is going to be important. And unemployment rate on Friday is going to be important. So splattering of economic data throughout the next week or so. But honestly, I think this is going to be a fairly technical week. I don't think any of these are going to end up being nearly as big a catalyst as we had on the SPY here when Federal Jay Powell spoke initially, now a week and a half ago. I think kind of the volatility has hit. We might have that one last drop down to the 420 here and then pop up, or we could see a little bit of a double bottom action right here around the support at 422. So those are kind of the two scenarios that I'm looking at. If we just V-shape back up to the top, I'm not here for that. I'm not going to be participating in that. But if we do get some kind of a nice bottoming pattern, or if we do push down even further and get further overextended to the downside and test the 200 period moving average, then I would get interested. So anyways, hope that helps, guys. Enjoy the trading week. I am going to be taking it pretty easy on trading week because I am actually coming at you here from Portugal right now. It is about 11:30 at night. So sorry if I'm a little long-winded tonight. My brain is already turned off a little bit for the evening, but I wanted to jump on and do the weekly report for you anyways and start the week off right. Hope you have a good trading day and talk to you guys soon. Let me know if you have any questions.